Hi, I'm Kara Murphy, and this is Money with Murphy. In 2025, the market's resilience was tested, but a third consecutive year of double-digit gains for the S&P 500 reflected confidence in the U.S. economy, especially around artificial intelligence. So let's look back at some of the highlights of last year and preview what could be in store for 2026. Despite losing 11% in the span of just 5 trading days in April, the S&P 500 rebounded to finish a remarkable 17% higher on the year. While that wasn't as strong as the 20% plus returns in each of the previous 2 years, 2025 proved the market could weather the storm against rising political uncertainty, heightened valuations, and growing skepticism around the sustainability of AI-related capital expenditures. And in a sign of broad strength across the economy, all 11 sectors of the market posted gains in 2025. Communication services was the leader for the second consecutive year with a 33% surge and was joined by a 24% return for information technology, 19% return in industrials. And the laggard, that was real estate, still in the black, but a gain of only 2%. Earnings were a big driver in the strong year for the market, as companies in the S&P 500 are expected to have 12% earnings growth once the final quarter's earnings are reported. That would be the second consecutive year of double-digit growth, a clear sign that the rally's momentum is backed by strong fundamentals. Analyst estimates for 2026 have earnings growing by 15%, thanks in part to tailwinds stemming from the implementation of the One Big Beautiful Bill Act. Technology companies are expected to lead the way with 28% year-over-year growth in earnings, followed by materials at growth of 22% and industrials with growth of 15%. The market's excellent run over the past several of years has been driven by the influence of the Magnificent Seven, but there are signs that a broadening of the bull market is starting to emerge. While the Mag 7 are expected to see roughly the same 22% year-on-year earnings growth in 2026, the other 493 companies in the index are estimated to see their earnings grow from about 9% growth in 2025 to nearly 13% in the upcoming year. One of the biggest storylines of the year in equities has been the outperformance of international stocks. Developed markets like the United Kingdom and Japan shined, with gains of 33% and 25% respectively. Emerging markets as a whole served as a breakout year with 33% gain, propelled by incredible years in South Korea, Mexico, and Brazil. Moving over to fixed income, it was a strong year with the aggregate U.S. bond market returning over 7% in 2025. High-yield bonds and corporates led the way with 8-ish% gains. Long-term treasuries also excelled, with the 10-year note returning nearly 8%, while the 3-month treasury returned 4%. Any discussion about the market's strong year must include gold and silver, which gained a whopping 65% and 160% respectively in the year. Their record-setting surge was driven by a combination of investors seeking safe haven, persistent buying from central banks, and the Federal Reserve's rate-cutting cycle. While speaking of the Fed, officials started to shift their priority from fighting inflation to a weakening labor market by cutting interest rates in the final 3 meetings of the year. The benchmark Fed funds rate now sits at 3.5 to 3.75%, at a time when the committee members are having trouble reaching a consensus on the appropriate level of rates. The promotion of a new Fed chair in June and the future direction of rates will be a couple of storylines to watch in the next year. We'll also be closely monitoring if the astronomical business investment in AI is actually sustainable, whether international equities can maintain their momentum, and if a broadening of the rally beyond the Mag 7 starts to solidify. We look forward to connecting with you on these stories and more as the year progresses. As always, invest wisely and live richly.